Is it time for gold to correct a little bit down into the short-term daily cycle low? Well, usually these short-term daily cycles last for anywhere between 1.5 to 2.5 months, and the ongoing daily cycle is now 42 days long. So I think there is a pretty good chance that we have seen the short-term temporary high on gold a few days ago, close to $2,070. So assuming we have seen that high, looking at the Fibonacci retracement numbers for the ongoing short-term daily cycle since late January, as I often mentioned in a lot of my older videos, the most common retracement numbers that are hit on the way back during a correction are the 38, 50% and 62% retracements. So one would expect this correction to come down to perhaps either 1960 or 1925 or perhaps even 1890 based on these retracement levels. These retracement levels also actually do coincide with some of the previous highs. We've seen an intermediate cycle top previously at 1960, so there is a coincidence between the 38% Fib level and the previous high. There is another previous intermediate cycle low somewhere around 1920, and there is also been a previous intermediate cycle low somewhere around 1880. So all of these Fibonacci retracement numbers are pretty close to previous cycle highs, so the confluence of some support zones says that it is quite likely that the daily cycle low might actually bounce from one of those levels. But additionally, the previous all-time high all the way from 2011 is also somewhere around 1920. So this multiple confluence of support levels around 1920 tells me that perhaps this correction is going to bring gold all the way down to 1920 before the continuation of the rally of the ongoing intermediate cycle. And the intermediate cycle is not that old yet, it's still 86 days old. Usually these cycles last for around half a year. So we are going to see a bit of a bounce into the third daily cycle, into second half of March and into April, especially after the FOMC meeting, where by now it's pretty certain that the Fed is only going to hike by 0.25%. So yes, this relative certainty does mean, of course, that a lot of it is already priced in. So what's likely going to be important at the upcoming FOMC meeting is the Fed's expectation of several other rate hikes sometime during this year. If over the next few days the general stock market still stays relatively soft, then the Fed might talk dovishly about the future rates, helping to make that new rally both in gold and the general stock market. Another very interesting commodity right now is silver. Again, as I mentioned in one of my older videos that was quite a while ago, usually silver does catch up with the gold rally a little bit later into the cycles, into the rally. We've already seen gold approach recent all-time highs, while silver is still below $27. So I think with the next gold rally sometime into second half of March, early April, there is a pretty good chance that silver will come back to the top of this consolidation box, somewhere close to around $30. Wouldn't that be nice? As I've also mentioned recently, copper is a very interesting commodity right now. It has poked above this consolidation box a few days ago, and as I've mentioned to the members at myfinanceteacher.org, I was going to increase my allocation in copper-related assets after a bit of a pullback. We've seen the pullback, I've increased the allocation. We do see a couple of green candles right now, so with a reduced risk of buying a falling knife, I might actually increase my allocation a little bit further into copper-related assets. But talking about the cycle, it's only 86 days old. Usually these cycles do last somewhere around half a year, at least since the middle of 2017. So I expect some further nice action in copper, perhaps at least over the next month or so. Let's have a quick look at corn. If memory serves well, we've had some nice trades in corn over the last several weeks. But to be honest, I didn't expect corn to shoot so much higher over the last couple of weeks. Talking about the cycle though, I think there is a good chance corn has topped a few days ago. Usually corn cycles last for an average of 144 days. That's at least since mid-2016. The previous cycle was pretty short at only 96 days long, as well as the cycle before that. So it's likely that the ongoing cycle will be a little bit stretched to keep the average close to where it is. So far, this corn cycle is already 149 days long. If the cycle produces a bit of a cycle low over the next few weeks, that will give us a bit of a stretched cycle and another buying opportunity later on. We're going to have a look at more details, including seasonality, with the members at myfinancesteacher.org. So feel free to join us to catch that buying opportunity a little later on. This is soybeans. Similar situation over here. The cycle is 122 days long. I don't really want to enter into the cycle when RSI is already showing a negative divergence. A bit of a higher high on soybeans over the last few weeks and a lower high on RSI. Cycles usually last for 145 days, so I would expect a bit of a cool down again over the next few weeks. Another very interesting asset right now is cryptos and Bitcoin. I think Bitcoin is ready to come down into its next cycle low. Cycles usually last for around a couple of months, an average of 63 days since the pandemic lows. Back since the previous cycle lows on Bitcoin, I do have some allocation to Bitcoin, but I'm looking forward to increase this allocation perhaps over the next few days to a few weeks once we see this next cycle low. As I have mentioned previously, I have been expecting a bit of a sideways cycle with relatively low volatility because historically the periods of high volatility are replaced with periods of lower volatility. We've talked about that in some of the previous videos. And that's basically what Bitcoin has been doing. It's been moving sideways more or less. And there is a relatively strong support zone somewhere around $30,000 to $33,000. Again, we'll keep looking at more details with a lot of interesting indicators with the members at myfinancesteacher.org. So feel free to join us. And in the meantime, make sure you hit that like button. Have a nice day. Bye-bye.